Okay, let's start the webinar. Good afternoon, dear investors. Thank you all for joining us today to another online bond issue webinar organized by Orion Securities. Today, we'd like to present to you the offering of the second tranche, actually, of one of the largest real estate development group subholding companies, Vanagas Asset Management. As many of you might remember, Vanagas Asset Management issued 3.4 million euros worth of bonds during the first tranche back in April, and today they are back looking to raise another 2 million euros worth of bonds during the second tranche of the issue. Today with me presenting, we have the Chief Financial Officer of Vanagas Asset Management and the group, Raimondas Lukaševičius.
Hello to everybody.
Yes, and I, Matas Šipkus, associate here at Orion Securities. During today's webinar, we will present the details of the new tranche. We will expand further. We'll expand further on the issuer's activities and financials, and of course, answer all of your questions. As usually, you can put your questions to the Q&A box on top of the screen during the whole webinar. Yes, so a short summary of the issue. Vanagas Asset Management is a part of the larger Vanagas Group. The issuer is a subholding company that consolidates lower real estate development projects developed by the group under closed-ended investment funds. The current tranche is a part of the larger 8 million euros bond issue program. During this current tranche, the issuer is looking to raise up to 2 million euros. Also, they have the option to expand the tranche to 3 million euros if they reach the significant demand for the bonds. The yield for the second tranche is 9.5%. Interest payments are made semi-annually. It's just worth mentioning that the first interest payment will be made on 29th of October this year. This is because the first tranche was issued 4 months before, so the interest payments will be made to both tranches at the same time. The term of the current tranche is 26 months, maturity on 29th of October in the year of 2027, together also with the first tranche. Then looking at the collateral, the issuer has pledged the fund units of closed investment fund vehicles with a total net asset value of 16 million euros. Each fund in question develops separate real estate projects that Raimondas will expand on a little bit later during the presentation. It is worth noting that one of the main covenants of the issue is based exactly on this collateral, and it says that the net asset value of fund pledged to investors at all time must be 2 times higher than the total issue of the bonds. Yes, and second collateral are the receivables from the group company Vanagas Group. The idea for this collateral is that the value of the development projects would not leave the issuer before the redemption of the bonds. As a short summary of the financials, as it was already mentioned, the issuer is a subholding company that doesn't directly own the real estate development projects. So the investments are counted as financial assets on the balance sheet. Hence, it's worth noting that net profit is, I guess, more exact metric to look at the financial performance. And as you see, the consolidated financial net profit for the year 2024 was more than 8 million euros. What we believe is a more important metric on this financial statement is is the company's capitalization. The shareholders' equity position is larger than 32 million, and the equity ratio is at 87%, which is a very solid metric. Yes, now let's look through the terms and conditions of the second tranche. As it was already mentioned, the issuer is UAB Vanagas Asset Management. The offering is done publicly in the Baltics. So, as usual with the public placements in the Baltics, every investor from Estonia, Latvia, or Lithuania can invest through their financial intermediaries or commercial banks that are part of the Nasdaq infrastructure. The size of this tranche is 2 million euros. As it was already mentioned, the issuer may, at his discretion, increase the amount to 3 million euros. So the tranche is a part of the larger 8 million euro bond program. The subscription period ends on 29th of August, so at the end of this month, and the tranche will be issued on 2nd of September. So, as it was mentioned, the term is 2 years and 2 months, or 26 months, with the maturity date set on 2027, October 29th. The yield of the second tranche is 9.5%, and the minimum investment amount for this issue is the value of the bond, which is 1,043 euros and 69 cents. We would like to explain a little bit more this exact pricing. So the pricing consists of two parts. The first part is the clean price of 1,009 euros, roughly, that sets the yield of the tranche to 9.5%, and the second part is accrued interest from the issue of the first tranche. So roughly speaking, at the first interest payment period, the investments will get the funds that they already paid for those accrued interest while buying the bonds. So, yes, and now looking through the main covenants, as it was already mentioned, the bonds to pledge shares ratio, which at all times must be the total net asset value of the funds issued must be larger 2 times than the total amount of bonds. Then the second covenant is adjusted capital ratio, which should not fall below 30% at all times during the bond issue, bond period. For the purpose of calculating the ratio, the equity and assets are reduced by loans granted to the shareholders and to subsidiary companies of the shareholder. Then, furthermore, we have a couple of other covenants that are usually in place during such issues, which is consolidated reporting, and of course the company status, which means that company could not change its status during the period of the bonds. Yes, as it was mentioned before, the maturity of the bond is in year of 2027. However, there is an early redemption option in place, which kicks in the year after the issue of the first tranche, and if the issuer decides to redeem their bonds 1 year after the issue of the first tranche, but not later than 2 years after the issue of the first tranche, they will have to pay a 1% premium to all investors. However, if they decide to repay the bonds 6 months before the maturity date, they wouldn't have to pay any premiums to the investors. So, use of funds raised by the issue would be used for financing working capital needs and development investment projects. Also, so the repayment of the bonds would be made from cash flows gained from redemption of the investment project, and also the company has also leaves a chance for redemption by refinancing the bond issue if the market conditions changes. So I'll now give floor to Raimondas to explain a bit more about the collateral and the use of funds.
Thank you, Mate, for the introduction. Our collateral amounts to almost 16 million. This ratio is very favorable amount to investors, as we intend to keep it that way. Regarding NAV, net asset value, this is the basis on which the total value of the collateral is calculated. Most of you probably know that what a NAV is, but essentially, what does it represent? It reflects our ownership share in a specific project based on our investment. That means asset minus liabilities. How it is calculated? Once a year or more often, the value of the assets is determined through the real asset valuation. This is carried out by independent certified property valuers. We work with various companies in this area, and the NAV based on this information is calculated in three stages. First, by the accounting company, then it is additionally verified by management company Demus Asset Management, supervised by the Bank of Lithuania, and finally, during annual or interim audits of the fund, independent auditors review and sign off on these values. For the projects, those shares we pledge, our largest current group project, Mūnai, nearly 500 mid-segment apartments in the Žirmūnai district, right next to Šiaurės miestelis. We started the first stage of development in 2024, and our sales exceeded our initial forecasts. The project proved to be very attractive to clients. This led us to start the construction of the second stage earlier than we had originally planned. As the construction and sales of the first stage are gradually nearing completion, almost all the apartments are sold. Another well-known and significant project in Žirmūnai is Kaip Niujorke. It has two stages. The first stage is practically sold out. Only a few apartments remain. As a result, we are moving rapidly with the construction of the second stage and have already started sales. We see that the demand for these projects exists and sales are going well. But in terms of collateral, we still wanted to offer investors a balanced mix. The Mūnai project and Kaip Niujorke project are more about the present. And since the bond issue spans several years, we include one more forward-looking project as collateral, Pumpėnų Street. Located in Justiniškės near Pašilaičiai, we recently obtained a building permit for a sizable project here, and we will soon start apartment sales. If the value of this collateral overall were to fall below twice the bond issue size, the information document lists other funds we hold units in, which we could pledge if necessary. And speaking of them, they also are in Vilnius, in residential development, which we see as our strength. Let's go forward. Now let's talk about where the cash flows for bond redemption will come from. We have set our base scenario to redeem the bonds in the second half of 2027, but we also retain the possibility, if market or conditions are favorable, to refinance them earlier. We have identified 4 projects for this purpose, 2 of which I have already mentioned. First, Ežero takais in Vilnius, Sidoronių Street near Bypass and Vilnius Outlet. This is a relatively small project we acquired last year, and sales are essentially complete. And we are moving forward distributing dividends to the various shareholders, including ourselves, at the end of this year. Second, Senamiesčio Link project in Naujininkai. This is also a relatively small project acquired last year. There are few apartments here, and we expect sales to finish by the end of this year, with dividends distributed late this year or early next year. Third, Cape New York, as I mentioned, phase 2 construction is now underway. Since this is not a small project overall, it has 174 apartments and 11 commercial units. We expect construction completion and sales completion towards the end of 2026. Dividend distribution is expected in the first half of 2026. It is also worth mentioning that we can generate cash from the development of new projects. Here I am referring to the projects like Ežero Takais and Senamiesčio Link, relatively small residential projects with under 100 apartments. Our long-standing experience shows that we are able to develop from the acquisition to complete self-out within 15-18 months, and then distribute funds to shareholders. This proves that we are currently also performing due diligence and assessing similar assets not shown here, which is, if required soon, would allow us to expect dividends in 2027 or possibly even in 2026. One and last point, receivables from Vanagas Group are also pledged to investors with a first ranking pledge. It is worth expanding here so you understand what kinds of activities exist outside of our issuer's investment subholding. These are other operations which also generate positive cash flow, and we see that the holding above Vanagas Group will, if necessary, have the capacity to repay part of the loans it has received from the issuer. So let's move to next. Speaking about the funds from this issue, raised from this issue, their purpose is very clear. We plan to use the funds for newly acquired projects, partially financing their development. And regarding new projects, as you can see here in the table, we are actively negotiating 7 projects. They are in various parts of Vilnius. Due diligence is ongoing. But what is important to mention here is that all of these projects are relatively close to the city center. We are not moving into the far outskirts, and we plan to build either mid-range apartments or, in some cases, even premium class apartments. We do not plan expansion into commercial real estate. We are and consider ourselves to be residential development experts, especially in Vilnius. We know how to evaluate projects, plan and manage construction, sales, and develop projects quickly, effectively, and profitably. This is our strength, and this is what we want to continue. We do not want to take excessive risks experimenting with the new types of development, although we do not rule out cautious consideration of such options. So let's go further. The first tranche of our bond issue was very successful. We raised about 3.4 million euros, even though we had planned to raise 3 million. How were these funds used? First, for the acquisition and development of new plots, it's 2.2 million. And this usage was used for 4 land plots, and money used for full or partial payment cash flow of these land plots. The next part is 1.2 million. It was used for the construction of ongoing projects, Nemunas by Citus, in Druskininkai Mūnai, Ežero Takais, Cape New York, and Senamiesčio Link. The result of all of these projects are actively moving forward, and investors can see tangible progress. I want to pay attention that no funds from the first tranche of the bond issue were used for operating expenses. Let's move.
Yes, now let's return to the key dates for the second tranche. As it was mentioned, the subscription period is going on until 29th of August. The issue period started this week on 11th of August. It is also a public offering to investors in the Baltics. So as I mentioned already, every investor in the Baltics can invest into these bonds through their financial intermediary or bank. That is also a part of a Nasdaq system. The issue date for the second tranche is 2nd of September, and the first interest payment will be made on 29th of October, going on semi-annual basis until the October of 29th of October of year 2027, when the redemption of the bond will be made. Yes, before once again giving floor to Raimond, let's summarize the key investment highlights. The issuer size and experience is the main highlight for us, we believe. The group itself is a top 3 real estate development in Lithuania for the year of 2024 based on sales. They have experience in developing several various size development projects in Lithuania during the same time. Also in separate Lithuania locations, though not only Vilnius, but also Druskininkai and Nida. This of course leads to the experienced management team. Mindaugas Vanagas, who is the owner and the CEO of the company, is a seasoned real estate developer with a proven track record. He has built a highly professional team around himself with expertise in investments, asset management, and of course, real estate development. So other points are related to financials and collateral, as mentioned earlier. Strong capitalization of the company with equity position larger than 32 million, consolidated equity position larger than 32 million, and of course the equity ratio of 87%, which is of course a very solid metric. And of course, the pledged collateral of fund units with the value of 16 million euros is one of the main highlights. Which yes, so yes. Now let's look at the issuer's activities and financials, and then we give floor to Raimondas once again.
So we decided to disclose more information about the group. Mindaugas Vanagas is the founder and sole shareholder. Some of you may have heard of him or even met him. The business history essentially began in 2009. Citus and Citus Construction started in 2012, with real estate development beginning in 2013 in Vilnius. After several successful first project, expansion to Kaunas followed in 2015. As the company and the group grew, and as we decided to carry out project also through funds, the management company Demus Asset Management was established. And as the group continued to grow, we decided to refine and expand the Vanagas Group structure, creating the issuer we are talking about today, the investment holding Vanagas Asset Management, and the alternative investment holding Vanagas Invest. Mindaugas Vanagas is a 100% shareholder of Vanagas Group Holding. Vanagas Group is the main holding company which controls 3 main branches. The first and central is the issuer, Vanagas Asset Management. We see this as our internal investment holding, which invests in selected, clearly defined, and in our view, relatively low risk businesses. What do we consider relatively low risk? Simply put, projects, many of which we have already discussed, that share on key characteristics. They are close to the city center, we have building permits or will receive them very soon, and where construction and sales are already taking place. We see this portfolio as balanced, clear, and well-defined. The second is Citus Group. This group is often visible and heard in the media or when visiting our projects. What does it do? It implements projects, carries out construction management, and purchases various real estate services from Citus Group companies, sales management, branding, construction management, marketing, and other real estate services. As the issuer, we purchase these services and we see that Citus having the ability to consolidate all services and with a long-term experience offers an excellent price to quality ratio. The third branch is Vanagas Invest. Vanagas Asset Management has little direct connection with this branch. It involves slightly longer-term investments, relatively high-risk projects or other businesses and investments. Like example could include, I mentioned Oxygen Group, a ventilation systems manufacturer in Kaunas, the Profitus crowdfunding platform in which we also hold a significant share, and the management company Demus Asset Management. So what speaking about us in numerical terms, the company is managed by Mindaugas Vanagas. As mentioned, started development in 2013. Over just 10 years, we have developed more than 180,000 square meters of real estate. That means over than 3,000 apartments sold to the clients. Most of them were in Vilnius, but we also developed projects in Kaunas. We currently have project in Druskininkai, which I will mention later. We have one project in Nida. In total, the number of projects has reached 25. The number of planned projects we intend to launch this year or next exceeds 10, which is significant volume. Largest projects. We have already talked about Mūnai, kaip Niujorke, and Ežero takais. Here we provide a little more detail. I would like to mention Nemunas in Druskininkai. This is the reconstruction of the former Nemunas sanatorium. There are two phases. Phase one is essentially approaching completion with nearly 180 apartments already sold. We are starting the construction of phase two as well as its corresponding sales. Next, our projects are developing Senamiesčio link, already discussed earlier, a new acquisition Panerių Street in Naujamiestis, Vilnius, in Kaunas Radio System in Žaliakalnis, our phase two, where we will carry out the reconstruction of nearly 250 loft apartments and commercial premises, and also Nida project for which we will soon prepare for the second phase, while the first phase is being developed by our related holding, Vanagas Invest. Radio City, 2 sales began in June and already 7% are already sold. Next. Among our newest initiatives, Miesto Akordai in Šnipiškės, a project that will transform the face of this neighborhood. House Street project focused on smaller scale but high quality housing, and Pompėnų Street project in Žirmūnai, mid-segment apartment buildings with convenient infrastructure for families. That's a brief overview for the project.
Yes.
Continuing, here is a map of Vilnius and showing the locations of our current projects. When planning new acquisitions, we make sure they are positioned so they do not cannibalize each other's sales. Essentially, this is how our portfolio is structured and rotates. Here we see in the next slide our projects in Kaunas, Druskininkai, and Nida. Without going too much into detail, I will continue with a couple of examples of our completed projects further. If you want to evaluate our reliability, the best way is to look at the footprint we have left in the market. For a few examples, Karaliaučiaus slėnis, a large 10-phase residential quarter developed between 2014 and 2019 with a total of about 750 apartments and houses. The project was recognized as the best residential quarter in Lithuania. This is important evidence that we can manage a long multi-phase project from the first excavation to handling over the keys. Next project is Savi, 125 apartments and 4 commercial units completed in 2022-2023. One of the first projects to Vilnius, 10 rules of architecture, that means standards of quality, life, aesthetics, and urban harmony. Radio City Phase 1 with 384 lofts and 36 commercial units, and Kauno Senamiesčio apartments, where 54 apartments and commercial units developed in 2 phases in 2016 and 2022. The key message is simple. Different cities, Vilnius, Kaunas, different products from residential quarters to conversions, but the same result, completed projects and the value base for the new projects. If you want to evaluate our reliability, the best way is to, from this point of view, regarding the structure. The current structure of the issue is quite standard and real estate development that each project is developed by a separate company. In our case, these are either funds, as mentioned earlier, or individual SPVs, special purpose vehicles, in which we develop separate projects. In this structure, we can distinguish 3 groups. First, the most important projects that we are currently developing, Victory Development 4, 6, and 5, Demus Development 6, and Victory Development 5. These 3 have already been mentioned as pledged collateral. Other projects we have mentioned Ežero Takai, Senamiesčio Link, Nemunas, and others. Second group, a group of companies where projects are already developed and sold, and only final works are ongoing. For example, Citus Fund, which is finalizing sales and its last project, Miško Arbai, and is completing fund closure processes. Third, finally, companies that are ready for new acquisitions, which we call empty companies. As you can see, in these companies, we hold significant stakes, usually more than 50%, but this varies. In some cases, we hold only 30%, and in others, the full 100%. And next, about the people responsible for all this. Mindaugas Vanagas, founder, sole shareholder, and CIO. His experience includes in Vanagas Group, in Vanagas Asset Management, Vanagas Invest since 2020, and the founder of Citus and Citus Construction since 2012. Me, as CFO, Raimondas Papaševičius. Before joining the group, I worked at Sirin Development, Modus Mobility, Aventus Group with crowdfunding, and I was also working in Palink as deputy of CFO. I believe my accumulated experience in both corporate finance and dynamic growth businesses will be realized here in a stable, steadily growing corporate group. Šarūnas Tarutis, investment director, with the group since 2018, responsible for investment decision architecture and capital raising logic, ensuring project phase matches risk profile and return targets. Vilnius and Laura are our fund managers with many years of experience in real estate analytics, investment, and fund management. Both are long-standing employees who have contributed significantly to the investment management of our corporate group. Next, let's talk about our financial information. Let's move to the consolidated financial statements. The most important line in this profit and loss statement is income from investment in shares of parent subsidiaries and associates. This reflects the part of profit generated from already developed and realized projects. It may seem unusual that in the consolidated statement, the largest share of profit comes through this line, but this is directly related to the status of the issuer. We operate as an investment holding. This means that the company itself does not directly control all the funds and the project SPVs, so profit from them is accounted for using the equity method. As for operating revenue, the 2 million consists mainly of apartment rental income and revenue from projects fully controlled by the issuer. Let's move to next. So about the assets, it's important to note that the largest parts consist of long-term assets. We see a significant increase here, driven mainly by investment in associated companies, our managed projects in which we have a significant stake, but which are not fully consolidated. A large part of the long-term assets also consist of loans granted to related to companies. These are our internal investments, which return as projects are realized. If we look at the current assets, the largest part is receivables from the parent company and subsidiaries. This is natural, as during project development, cash flows circulate within the group. The cash balance in our accounts is sufficient and to ensure ongoing operations and commitments. Next. Capital structure. Here we can clearly see the strength. The majority of our assets are financed with equity. Equity accounts for about 87% of total assets. This means we are financially very stable and we have low dependency on borrowed capital. We have relatively little debt. The amount of long-term debt has decreased over the year, and current liabilities are under control. Moreover, most of our financial liabilities, bank loans and shareholder loans, were repaid at the beginning of 2025. This means that today we have a very healthy financial structure, allowing us to react quickly to market changes and to calmly plan further projects. Sometimes we receive investor questions about the high equity ratio. Is it more common in real estate development to see high leverage? As I see, this is related to our consolidation principles. Under accounting standards, we do not consolidate the full assets and liabilities of projects without full control, but only our investments of its value growth over time. This means we will largely present our accumulated equity without consolidating debt at lower project levels. If we hypothetically consolidated underlying debt, our equity ratio would still remain above 55%, well above what we currently see as the market average.
So, thank you, Raimondas, for presenting the overview of the company and the financials. Now let's move on to the risk factors. As usually, before making an investment decision, the investors must take into account the risks associated with specific financial instruments. I just want to clarify that the full descriptions of these risks can be found in the investment document, and then inviting everyone to take a look at those. So we'd like to split the risk factors to three sections. So the first one would be the general risk factors. As it was already mentioned, the company and the group itself operates in the real estate development market. So I guess all risks associated with real estate development should be mentioned, which is of course real estate risk, competition risk, and the real estate market itself. The risk of real estate market itself. So going further, the group specific risk factors. So as you already know, the issuer is a holding company, and of course it's in itself, it doesn't control the development projects. They only own the funds and project SPVs that are doing the project. So basically the redemption of the bonds would need to happen by lifting up the cash flows generated from sale of the projects through dividend payments to the group company. Then risk related to the bonds itself, as usually the bonds may not be suitable for all investors, so everyone should think about their wanted risk level. Then we would like to mention that an active secondary market of bonds may not develop. It wasn't mentioned before yet, but the bonds are already listed on Nasdaq First North Baltic. However, the issuer does not have any obligation to do some sort of market making. So every investor that might thinking to selling or buying the bonds on the secondary market should realize that the price of the bonds might not be at the price they would like to be. Yeah. So before moving on to the Q&A section, I would like to remind you all of the terms of the second tranche. So the issuer is Vanagas Asset Management. The bond distribution is public in all Baltic states. The size of the second tranche is 2 million euros, and of course the issuer may at discretion increase the issue size to 3 million euros. The second tranche is a part of the larger 8 million euro bond program. The subscription period runs until 29th of August. And the issue date is on 2nd of September, and the maturity date is in the year 2027, October 29th. The issuer is offering 9.5% yield for the investors. Coupon payments are semi-annually, starting on 29th of October of this year. Yes, then we like to mention the collateral again. It obviously consists of two parts. The first part are the issued fund units that must be 2 times larger than the bond issue itself, and of course the first rank pledge of all issuers' receivables under any agreement between the issuer and Vanagas Group. The minimum investment amount is 1,043.69 euros. Yeah, so, and just mentioning one last covenant is the adjusted capital ratio that must not fall below 30%. And obviously, as mentioned before, the company has a right for early redemption, which I guess opens up a year after the first tranche. So after the 29th of April of next year. So this is the all of the presentation. Now let's jump into the questions. I can see that you have asked quite a few of them. So the first question is, what's the idea behind the smaller tranches with just few months between them? When are you planning the next one?
We look at how we manage and how it is going on with the attraction of money through the bonds in the second tranche, and how the purchase and need to purchase of money for the land plots goes on. So this will answer us the next question, when it will happen, if it happen for the third tranche. We do not want to have too much money in our accounts that are not working, and it is difficult then to earn on them interests.
Yes. And thinking on the third tranche, you currently do not have any plans for the third tranche
At this moment, no, but let's look at how it happens with the second one. So I think that we are thinking about it, but like a forecast, but not the exact dates.
Okay, thank you. Uh, who's another question? Who's checking and calculating the capital and bond pledge ratios? How often is it being checked? So I shall answer that. The checking of the covenants is being done by the bondholder trustee, UAB of the FINA, and the ratios are recalculated every half year, so on semi-annual basis. Under what specific circumstances will you opt for early redemption? How likely is it?
The likelihood is quite low. I could say that early redemption would be in a case that we do not have enough projects or the market would change drastically, what we do not see now. And we do know that, so it is the question about livelihood. And these specific circumstances, how they could arise, it could be like if we have very bad way of the Euribor moves or the supply and the demand in the market. So this would cause such a big, very fluctuation. But now we do not see this one because we see that stable growth and stable figures in the market.
Thank you. Then we have a question about the LTV ratio. What is the current and post-issue consolidated loan-to-value ratio, including senior loans?
Consolidated LTV is I don't remember now here the figure, but it is a very good one. Can you check? But I could not say now. We were disclosing this one, but this is no, we do not disclose this. Usually we look at this like a current loan.
If we do not have the exact,
we do not have now the exact figure here.
Okay, so we'll try to answer the question after the webinar. Yeah, thank you for the question. And who are the main competitors in this particular market segment? So I'm guessing in just
Holmberg, Runner, and the others. So the residential market who gives similar products and flats built in big quantities, volumes in Vilnius, Kaunas. So these are the main competitors. And we know about each other and they know about us. So this is like quite clear structure, quite clear information what we know about each other and what we see that this competition is normal and moreover I can say that total market is going and sees that supply is less than demand, so it is very favorable for all of us, and that's why we and competitors try to use this situation in our favor.
Okay. So we have a question about the source of redemption. Does the planned issuer's proceeds imply that 100% of apartments sold in all of the pledged assets, or is there some buffer?
There are and some other buffer, not only pledged assets. We have buffer also in other funds that are not pledged. So it's one thing. The other thing, the shareholder also can help if the need would be. So we see and we feel safe about this redemption and do not see any problems.
Yeah. Yes, we have a question about the market conditions. How do you see the current market environment, sentiment? How does it compare to other Baltic countries? If you see strong demand, what are the catalysts for it?
Mainly, I could say more about Lithuania. I could say that this question I see in several parts, could say. In Lithuania, we see that inflation is about 3% and the prices of the flats goes by 9% during this first half of 2025. In Vilnius, in Kaunas, it is 6%. About Latvia and Estonia, we pay attention more from other angle. We look if the project is profitable according to our recalculation models, and if they show the very good return, then would we pay attention at them more. Temporarily or lately, in last years, we see that in Lithuania, these models work quite well, and we know how to do that. And Latvia, Estonia, they have more challenges. So we do not want to have more experiments, a lot of experiments. So here we are trying to catch what we know the best and to use it.
Okay. Let's go to another question. Does the pledge value taking into account financial debt on fund level? And also a second question, why is the equity assets ratio so high?
I think that I answered this question about this high. So it is related to the consolidation method according to the method that we apply. Method, I mean, let's see, ownership method. So as much how much it belongs to us, we show the investment and the debt and the value which increase over how much we during the year, during the period while we have this ownership. And does the pledge value take into account financial debt? It takes on the overall company level, so it's in process.
Okay. Does Citus work with projects only developed by Vanagas Group or also for third parties?
It works only with the Vanagas Group, but it works like on the market conditions. So we check the prices, and it is not so, and is not allowed to have unfavorable or not base prices. So every time the prices are checked with the third part, and we check that it would be in line with our market ones. So this is how it works and gives us the strength to move quickly and to finish the projects in time.
Okay. Planned investments in 2025 are more than 66 million euros. What is roughly the split between debt and equity?
This question is quite tricky a little bit because not all companies are what we see in Vanagas Asset Management belongs in 100% to us. So when we talk about this figure, we take how much it is in the whole about investments. So mainly these investments are related how much in total to attract, and equity or Vanagas itself, the investment part is the minor one, and the bigger one is the temporary share of the borrowed capital from bank, from the bonds, and from the direct other investors in the funds.
Okay. So let's move on to another question. The question consists of two parts. First one is, who is the designated deputy CEO with signatory rights if the CEO is unavailable? And does the arrival of the new CEO may impact how Vanagas Asset Management operate or shift any goals of the company?
I think for me it's too early to say that. I'm not working here quite a lot, but we have few persons who work quite long here, and they assist partially role by role by the function. I mean, and in the future, I see that it could be a possibility to be me like a deputy for some questions for the CEO.
Okay. Yes, and as we can see, it's the last question. So the question itself, you're aiming to raise 2 million euros with the possibility to increase to 3. How would you use the extra 1 million euros, and what happens if you raise less than 2?
The value of the land plots, it is much higher, so it depends which part of the land plot this cash flow from the bonds would cover. And if we have more, then we could use it for in the bigger part of financing land plots and temporary for the development of the project. And the second part, what happens if we raise less than 2, then we try to catch and find this money in alternative financing from other investors or the direct equity injection, or the worst option also in the mind could be not to invest to the projects that are going to be finished in 2028 or very far away.
Yeah. Okay. So thank you for the questions. We can see that there are no more questions. So before ending the webinar, I would like to remind everyone that subscription is going on until the 29th of August. The issue date for the tranche is the 2nd of September, and the issuer is offering 9.5% yield for the investors during the second tranche. So thank you everyone for joining in. Thank you for all of the questions, and I hope the webinar was informative. And have a great day. Enjoy the rest of the summer.